In this video, we will look at what is technical analysis. So technical analysis is a tool and it has two main purposes. The first one is that it is used as a visual representation of the market, and the second purpose is that it can be used as a predicting or forecasting tool. Now let us first look at the first purpose, which is the visual representation of the market. Now stock markets are just like any other markets, and the nature of the market is that there will be buyers and sellers who will be transacting, and when there are buyers and sellers, there is supply and demand that goes on between buyers and sellers, and there is a power dynamics like who is driving the price down or who is driving the price up. So when the buyers are in control, the price rises up. When the sellers are in control, the price is pushed down. So this market data can be visually represented in the form of charts. So now the most common form of chart is the candlestick chart pattern, which there are many attributes of a candlestick, like the price at which the stock opens, the price at which it closes, the open, high, low, and close. So all this can be visually represented in the form of candlestick. And the important thing to note here is that this visual representation is based on 100% factual data, that it is plotting the data as it happens and the historical data as well, and it is based on the transactions that are happening between the buyers and sellers in the market. So when anybody looks at this data, everybody looks at the same data. So this will make more sense why I'm saying that, why everybody looks at the same data when I am explaining the purpose number 2. So purpose number 2 is that it can be used as a predicting or a forecasting tool. Now, while purpose number 1 is showing what happens currently and what happened in the past, which is factual data, but using this factual data, technical analysis can be used as a prediction or a forecasting tool. What do I mean by that is that we are using technical analysis as a tool to predict a future event. We are trying to predict which direction the stock might move and by how much quantity it might move. So that is the second purpose of, and it is slightly different from the first purpose. By predicting and forecasting, just like weather prediction systems, where it tries to predict when and where it will rain and forecast how much quantity of rain might pour down, technical analysis uses the past data to predict the direction and quantity of the price movement. So it is used to predict the direction and quantity of price movement. And here is the most important takeaway of the purpose number 2 is that it is a prediction or forecasting systems are never 100% accurate. There will always be an element of error in the direction. So when a 2 or 3 traders look at the visual representation of data, they'd see the same data. But when you ask them to predict or forecast the stock price movement, each of them might have a different version of. One might say the stock might move up, one might say the stock might move down, the other might say the stock might go in the sideways. So the possibility is that all three are possible possibilities. It depends upon, it is an event in future, so all these are all possible combinations are possible. The stock might either go up or it might go down or it might go sideways. And when it comes to the using technical analysis of predicting or forecasting tool, there is an element of subjectivity. So each, like I said, the 3 traders, they might all have a different opinions based on what is visually shown in the technical analysis. So I'll be making a few more videos about how you can use technical analysis chart patterns. So follow and subscribe to get more information and on technical analysis.